Hi, Jonathan York by Financial Partners, looking at investment markets. Inflation data coming out of the US again has been pretty constructive. That was better than anticipated. So that's now the CPI and also the PPI better than estimates, and really paints a pretty good picture with the US sort of growing at with a pretty robust economy, but also as well inflation is falling. Now that was certainly noted by the Fed in its latest minutes, but also as well there was sort of a caveat there that potentially Trump's new policies could be inflationary going forward. With the Fed meeting at the end of this month, it'll just be interesting to see what they do. Potentially they're going to be on hold now because there isn't any need for the Fed to cut interest rates further. So you have got falling inflation, but you also got a pretty robust economy on the back of that jobs data. Now that probably won't please Trump because he wants lower rates. And certainly term rates have backed off a little bit on the back of those inflation numbers. The 10-year is back below 460 now at 458, and the 2-year is 429. Now Trump has now been sworn in, and right away he sort of signed around 200 sort of executive orders. Probably the most controversial was the pardoning of around 1,600 of the Jan 6 rioters from 2021. Interesting on the pardon as well for the Jan 6 rioters. JD Vance has come out and said, well, actually, if they broke the law, then they should have been punished and should be in prison. Now, in his speech, there was the usual sort of facts, non-facts, and really what people wanted to hear. Really, these sort of interesting comments will be oil. Apparently he's just going to drill, baby, drill. But what is interesting is that the US has been the highest producer of oil for around the last 4 years. So potentially, if they do increase that supply, that potentially obviously forces prices down, which does sort of help on the inflation front. But then again, the companies that are actually producing the oil are earning less money, which potentially for some of those companies could then force them to sort of cut back on production because it's not cost effective. And the other big talking point, obviously, is tariffs. He still has it in his mind that by issuing tariffs, that is then a cost to the country of production. And he's talked about having this external revenue collecting service, which apparently according to him is going to knock on the country of production and say, oh, by the way, the 25% tariffs, can you please pay to us? That's not the way tariffs work. Tariffs are a cost to the end consumer. Now, obviously, his big targets on the tariffs are going to be Mexico and Canada. Mexico supplies around 70% of the avocados consumed in the US, and Canada supplies around 40% of the timber. So by putting tariffs on those around 25%, that is a direct cost to the end consumer in the US. And the other interesting point as well is obviously TikTok. Apparently he saved that for the next 75 days, which is quite ironic really, because back in July 2020, he was about to sign an executive order that was going to ban TikTok in the US. So it's just going to be interesting to see how the next sort of 3 to 4 months sort of play out. Trump has also pulled the US out of the Paris Climate Accord. Now, oil will certainly come back a little bit, back at 76 and change now. Latest inflation data from the UK was slightly better, came in at 2.5 versus 2.6 expected. That potentially gives the bank a little bit of sort of help, and potentially could see a further rate cut. Because again, the UK economy needs it. Now, the EU inflation has sort of nudged up in the last couple of months, currently running around 2.4%, and really just waiting to see what impact the new Trump administration has on the EU economies. Now in Australia, there certainly seems to be a sort of change in tone from the Reserve Bank, and potentially we could be looking at a rate cut at the next meeting. Latest growth data out of China as well gave the Australian economy a little bit of a boost. That comes in year on year at around sort of 5% from the Chinese economy. The latest quarter was 5.4 growth, which again just gives the Australian economy just a little bit of a boost in terms of their sort of minerals and resources. Now here in New Zealand, with a trade deal with the United Arab Emirates, it's a pretty big deal for the New Zealand government, and again sort of just helps trade. Now New Zealand economy as well, we get a bit of a boost from those increased growth numbers out of China as well. Also been a little bit of a cabinet reshuffle as well, as Luxem tries to sort of just freshen up his cabinet. And so far it looks like the summer spending has been pretty good. Good number of tourists, events here in New Zealand as well have been pretty well supported. So it's just going to be interesting now to see how that translates into growth data coming out. Because the economy is still pretty weak, although what's not helping is the fact that the New Zealand dollar is falling, and with oil prices that have been sort of increasing, or they've come back slightly in the last sort of week or so, but that does have a little bit of an inflationary impact. But obviously all eyes will be on the Reserve Bank for the February 19th meeting, where they're expected to cut interest rates by a further 50 basis points. And as with most other countries as well, New Zealand just waiting to see what impact Trump does have in terms of tariffs on New Zealand trade. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I look forward to speaking to you soon.